clearly, I believe, is on Trump's administration's mind, is to revalue the gold. It makes sense for them to do that now, especially a country that's so indebted. It'll give them some breathing room to borrow money if they can, start pricing gold at least near what its current price is. Now, there's people talking about it pricing it at 5,000 and all. I don't think they could justify it pricing it above where it's trading, but I certainly think they're going to revalue it. And that's just another bullish factor for gold overall.
The Trump administration may consider revaluing gold to manage the country's growing debt. The government could create financial flexibility and improve borrowing conditions by aligning gold's price closer to its current market value. While some suggest pricing gold as high as $5,000, a more practical approach would be a moderate revaluation. This potential policy shift adds to the overall bullish outlook for gold, reinforcing its appeal as a hedge against economic uncertainty. Peter Grandich, a seasoned market analyst and investor, says, "Forecasting market movements is challenging, and even seasoned investors must endure uncertainty." While the stock market has been priced for perfection, with historically high valuations, key indicators suggest vulnerability. The decline of major stocks like the Magnificent Seven signals potential market weakness. Mainstream financial news often avoids acknowledging risks, but stock values depend on economic conditions. Given this backdrop, the market may move sideways or see modest gains, but the risk of sharp declines appears more excellent than the likelihood of significant upward moves. Primary gold producers are thriving, generating record free cash flow as gold prices rise and operating costs, like oil, decline. Gold miners outperform significantly, unlike the broader market where earnings growth is limited. This has sparked mergers and acquisitions, with major producers acquiring junior miners to secure future resources. A recent major merger in Canada and insights from the Toronto Mining Conference suggest more M&A activity ahead. As a result, the junior mining sector is poised for explosive growth. While sentiment among individual shareholders remains cautious due to past underperformance, the trend is shifting positively. Before watching the video, subscribe and hit the bell icon to stay updated with our latest uploads. We'd love to hear your thoughts, so comment below.
In other words, it's traded at one of the highest valuations ever. It had a group of stocks that were basically the backbone to it, the Magnificent Seven or whatever you call. They've rolled over. A lot of the indicators that markets are peaking are out there. They're telling us that. And, you can't expect to turn on a general financial news network and hear them to say that, because quite honestly, and I'll say it before and I'll say it again, most of those talking heads, Elijah, could be tossed off the Empire State Building and all the way down. They'd all say the same thing. Hey, so far, so good. So I don't expect them to ever give me an objective analysis. But the stock market, if it is still a place where you buy and sell part ownerships of businesses, and businesses still rely more on the economy than anything else, then I think that market, for me at least, is a sideways at best, maybe ink out small gains, but there's more danger of sharper declines than more sharper rises. Well, first, there have been some that have, and those are the major gold producers who are legally printing money. Their free cash flow is at records and is going to be outstanding even more in these coming quarters, because the gold price is constant or going higher, and one of their biggest costs, oil, to operate their mines, is going down in price. So they're legally printing money there. And the interesting about this, and I'm not the first to say this, but in a year where even top Wall Street analysts are not looking for much growth in earnings for the S&P and what have you, the one sector which is just outperforming them all with free cash flow right now are the major gold producers. And sooner or later, the generalists who never really look at that industry and look at all these other sectors, you're starting to see some of them talk about it. I was shocked to turn on one of the financial networks and hearing one of the talking heads talk about Agno Eagle. But you have to, given the fact that they're printing money in their free cash flow. And so that's leading to an increased mergers and acquisitions. And now you're going to then see these majors use their stock, which is going to be, nicely increasing, stepping down into the junior market to get their future, hopefully, resources. And that's starting to happen now. We just had a major merger in Canada of the two companies that'll be the Canada's second biggest gold producer. And I suspect after this major mining conference that just concluded, the world's biggest in Toronto, from everything that I've heard and gleaned from people, we're going to see a lot more M&A. So that's a sector that I don't worry about. I've actually increased my holdings in it in recent days and have a very, very large stake. Not a stake that the average person should take equally in terms of percentage with dollars and cash, but I'm convinced that it will come not trickle down to the junior market, but make that junior market explode. And we're already seeing that. We're seeing things like the GXXJ and all nicely up already for the year, but because it was so bad for so long, and still a lot of them are still not performing well, there's still a feeling of loss among the individual shareholders, but that's turning for the right reasons.
Peter Grandich highlights that the stock market has become highly volatile, with wild swings signaling a potential end to its long bull run. Such volatility often reflects a battle between latecomers chasing the trend and early speculators betting on a reversal. Economic uncertainty adds to the instability, with weak employment numbers and broader economic data pointing to a slowing economy, possibly even a recession. Peter Grandich exposes that the Federal Reserve's shifting outlook and unpredictable policy announcements further contribute to market turbulence. This unpredictability makes business planning difficult, and rising layoffs suggest economic weakness. While bulls may see this as unsettling, bears view it as confirmation of an impending downturn. Now, let's shift our attention towards the interview.
Well, it's very volatile. That's unusually volatile. The other day, I never saw Dow fall 500 points in the first 3 minutes of trading. I would argue that from a technical standpoint, after a long bull market run, whenever markets start to swing widely after a long move down or up, it's usually a signal that that move is coming to an end. And the volatility is between the late Johnny-come-latelys to whatever the move was, and the early people who are speculating that the turn is coming. And that's why we have the swings. Even as you and I speak today, after being down, 400 and something points, we're now up a couple hundred. And who knows by the time the day ends where we'll finish. But that is all part of because of really the uncertainty in the economy right now. We just saw an employment number that everybody says, it's good. No, you need 250,000 to really have employment growth, because of the people that leave the workforce, retire, pass away, etc. And, that was a substandard employment number, and it plays into a bunch of the economic numbers that have been out that are clearly suggesting a much softer economy, if not a recessionary climate. And we have the Atlanta Fed, which tends to be a volatile index, go from almost up 4% 6 weeks ago, now looking for a contraction that may be closer to 4%. So the volatility in the stock market, the uncertainty of, I joked this morning, and I think I posted it on my X page, that I just like to have the cell phone of Lubnick, because every time he comes and says one thing or another on a way of whether or not what may or may not be with the tariffs, the market moves several hundred points. So it's unsettling for business. If you can imagine any business planners out there, between the tariff news and now the employment news, we've seen the drop, much higher increase in layoffs. So this is if you're a bull, you can use the word unsettling. If you're a bear like me, it's starting to confirm the turn down that I've been looking for after the Trump pump, which I felt would last a few weeks into after his inauguration.
In light of these market conditions, gold remains an attractive hedge against economic uncertainty, while stock market volatility suggests caution for investors. As major gold producers thrive and mergers accelerate, the sector is positioned for significant growth. Meanwhile, broader economic indicators point to potential headwinds for equities, reinforcing the need for strategic asset allocation. How might a gold revaluation impact the wider financial system and monetary policy? What factors could determine whether the current market volatility leads to a prolonged downturn or a short-term correction? Drop your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for being part of our community.